Oh my goodness. All right. So this is going to be my first story time. I felt like I've done 18 videos already, so time to get personal. And I don't like telling this story. It's really embarrassing, but I want to do it because you can learn from my mistakes. I did something very stupid when I started trading, made a rookie mistake, and this rookie mistake actually cost me $100,000. So uh, please learn from it. I won't get that money back, but what I can do is prevent you from losing that money. So here it is. It really started with my introduction to stock trading, which was in the late 90s. And what got me into it was a boom. A boom usually sucks a lot of people into a market. A lot of people just started investing because of crypto, I'm sure. So it started with me with the internet stock boom. And for those who are too young, it really started around 97, 98, but I didn't jump in until 98. And at the time, I was 4 years out of college and 4 years into working in my career. So I was single and I had built up a little bit of a nest egg since I was single and I was in a good paying job. I only really spent about half the money that I was making, so I just put the other half in a bank. I heard about investing. I even thought about investing, but I was like, I don't know enough about it, so I wasn't interested in it. So I was just happy to see the money sit in the bank. But then all of a sudden, I started hearing about something called internet stocks, and these internet stocks were like tripling in a day. So I'm thinking, okay, I currently have 40,000 in the bank, and I could triple that to 120,000 in like a day or a week or whatever. It's like, all right, I gotta look into this. And also another driver was around the office. People who are older than me who were already kind of investing, they started investing their money in these internet stocks or whatever, and they start getting like you would hear people screaming, I just made $10,000 today, I just made $15,000 today. And I'm thinking, that's 3 months salary for me, 3 or 4 months salary. So it's like, all right, I gotta get into this. So here's the problem. First of all, I did no research, none. I just heard people yelling about companies rising 10 or 15%, and then I would just invest in those companies because I thought, why do research if everything's going up? Mistake number one, you always want to do your research. It doesn't matter how how good the markets are. You always want to, I mean, it's your money, it's your life savings. You don't, you would do a lot of research if you're buying a dishwasher, and people do no research when they're buying a stock. So do your research, very, very important. So didn't do any studying. Second problem I just put all my money in tech stocks. I knew nothing about the stock market. If I did, I would have learned that 66% of stock market professionals can't beat the S&P 500 over a 5-year period, and 90% of stock market experts can't beat the S&P 500 over a 10-year period. So the logical thing is put your money into an S&P 500 fund. Didn't know about that. I was just an idiot. I bought at the time, I don't know the full list of stocks I bought in the 90s, but I do remember buying America Online, Amazon, Apple, Yahoo. But I believe I kept my portfolio about 10 stocks, and they were all internet stocks. Now, in less than 2 years, and I started in 1998, from 1998 to about late 1999, I more than doubled my money. My portfolio grew to $140,000 by late 1990. And I was like, oh my goodness. I started thinking that at this rate, in 5 years, I could have $1 million. I could literally retire before I'm 30. So all is going good. And then the tech market began to crash in March of 2000. And I saw my portfolio falling like $5,000 a day. And I was just like dazed. I didn't know what to do. It's like I didn't want to sell. I'm like, I'm losing all this money. I'm losing like over a month's worth of salary in a day. But the only reason why I hold on, I was like, okay, it was all gains, so maybe I have to give some of those gains back. And I held on, and that was actually a good thing that I held on. But here's the problem. The market kept falling and falling. I kept losing more and more money. I became more and more scared, and I panicked, and then I sold. And I sold everything. When I sold everything, my portfolio, I only had $20,000 left in my brokerage. So not only did I lose over 100,000, I lost 20,000 of the principal. So altogether, it was really $120,000. And I got burned so bad that I didn't get jumped back into the stock market for another 3 years until 2004. And in those 3 years times, I actually started doing research on investing. I basically put myself through university on investing in those 3 years. So that was actually a good thing. So, from what happened to me, I just want to give you this quick lesson. Before you invest, learn, read about anything about stock, even if it sounds like the most stable stock in the world. Just learn, look for the weaknesses. It's like if you're buying a car, you want to know what could go wrong with this car. Um, a lot of people right now are investing in something like crypto, and they've never read one white paper on crypto. Also, you want to hold on to good stocks. A lot of the stocks I had in that tech portfolio were actually pretty good. AOL was bought up by Time Warner. Apple, Amazon, Yahoo. I mean, Apple and Amazon were the two like monster winners out of the 10 that I had. I don't remember the rest. I might have had like Cisco and Microsoft, but I just don't remember. But I would estimate if I had held on and never sold throughout that crash and held on today, I would have easily had $2 or $3 million from those 10 stocks, and most of those gains would have came from Amazon and Apple. But like I said, I panicked and I sold, I believe, in like late 2001 or 2002. I stayed out of the market for 3 years, but I did spend that time studying the market. I read about 20 investing books, and I subscribed to a bunch of podcasts, and I even bought a couple of courses to teach myself about investing. That's where I learned that you can't beat you can beat the S&P 500. It's very hard. However, if you want to guarantee yourself the best gains over a long-term period, you put the majority of your money in an S&P 500 fund, low-cost index fund, and you'll be fine unless you're Warren Buffett. You're going to do as good as you are going to do over a long time frame. So, like I said, since 2004, I've kept the majority of my money in the S&P 500 index, and I think I've done better than I probably would have done if I put my money in any hedge fund or done anything else. So what I would suggest is, as far as the lesson on how I lost $100,000 in the stock market, is always do your research, even if everything's going up. Look where the vulnerabilities are. Don't panic sell. And just don't be dumb with the money. Just don't throw your money at anything just because it's going up. Always look for the viable, the good and the bad. Do your research, okay? Hope you enjoyed this video. If you liked it, please like, share, and subscribe. Thanks. Bye.